A term we might come across in our course is depreciable value of a non-current asset. It's very rare, it doesn't come up much, but if it does come up, what is it? It's very difficult to understand. So let's talk about it. What is the depreciable value? So we'll get to that. But first of all, I guess what we say is no matter which method of depreciation, and there's two, there's straight line and reducing balance, and we haven't done reducing balance yet, but we'll get to it. But basically, we've used the analogy all the way through when we're learning about this, that we can think of a non-current asset, whether it's furniture, a car, a laptop, whatever, as a big tank of unused economic benefits. So let's say in this case, the value of this furniture was $50,000. Now when we buy it, we haven't used any of it. And all depreciation does every year is allocate or expense, I guess, the used economic resources, and that becomes an expense. So in the first year, we used $10,000 of economic resources from the furniture. The second year, we used another 10, then another 10, then another 10. And then we were done with it. After 4 years, we got rid of it. And what that left with was these unused economic resources here. And what we said is when we did our residual value, that's effectively what that is. Residual value is the unused economic resources of the non-current asset. It's the part our business won't use. So what we can say is that the bit that we did use, so we used $10,000 every year for 4 years, that is what's called our depreciable value. So it's actually the total value of the non-current asset that will be consumed or used by our business. And this was allocated as an expense called depreciation over its useful life. When we're done with it, the non-current asset, so in the furniture in this case, only the residual value will be left. That's the bit that we haven't used. And what we can think about is that this will be for another entity to consume or use when we sell or trade it into them. So the depreciable value, sort of long story short, is actually the amount of the non-current asset that we estimate that we will use as a business. It's the bit that we won't use is our residual value. So if we were to sort of represent that as a diagram, when we think about every non-current asset, it's really a story of economic resources or benefits. When we buy it, they're unused. Then we use it. And when it's unused, that's basically the asset's historical cost. So it's total economic benefits. So the depreciable value was the part that we will use. So that was the economic resources that our business will use. And when you think about it, if we did depreciable value $40,000, we got the residual value at the end here of $10,000. There's a little bit of a relationship between these numbers. So if we're ever asked to calculate this depreciable amount, we can just say it's the historical cost. In this case, it was $50,000 minus the residual value, which was $10,000. So, to summarize, what is depreciable value? It's the economic resources of the non-current asset that our business will use. And we can look at that as basically our total depreciation expense for the life of the non-current asset.